Hello and welcome back to About Crypto, where we talk to crypto people about what they are working on and how they got involved in the cryptocurrency space. We are back with another episode of About Crypto, and I have my buddy Edwin here. How's it going, man?
Going great, Cody. How you doing?
Living the dream in New York, man. Waiting for the last phase so I go back outside and live my life again, hopefully soon.
Excellent.
How's everything where you're at?
Everything's good. On the upswing. On the upswing. Hung out with some friends outside the other day at a park and felt good to be normal.
That's good, man. Yeah, I did that the other day too, and it felt good. It's about
Yeah.
time. All right. So my first question for you is, how did you get into crypto?
Yeah. I got into crypto in September 2017. Price was the biggest indicator for me to get into it. It's what drew me into it. My background's private wealth management. So we dealt with high net worth individuals, sophisticated investors, and I read the Bitcoin white paper and then followed by the Ethereum white paper. And I realized that the future was coming down the pike and that private wealth management, in my opinion, wasn't really long for this world, with Bitcoin being sound money and Ethereum being programmable money. Investment advisory services weren't where things were headed. Let's put it that way. Got in, started trading it, noticed it was very cumbersome, to say the least, and then synced up with my brother, who's actually our CTO, Michael Handschuh, rocket scientist. And I told him I wanted to do any asset to any asset at the best price. Very simple words to say, but after we worked on it for a couple years, we got our initial product actually coming out into production in the next few days.
Awesome, man. And
Yeah.
the project you guys are working on is called OneKanto, and would love to hear more about that.
Oh yeah, OneKanto. It's so Konto is German for account. So our goal was one account to access all pools of liquidity and all assets. So going further to traditional assets and enabling you to buy Apple or Tesla stock with Bitcoin, and making it seem natural and completely easy and as it should be to you. Currently, our core product that we're just releasing into production is called Telonium, and that's an omni-path smart order router, which does any asset to any asset, making it look natively, and then going a step further at the best price. So instead of going and finding the best Bitcoin USD price across 5 or 6 different exchanges or whatever the case may be, we'll go Bitcoin to ETH to Litecoin to USD. And what we find is we get a better price for the client, and it reduces the market impact. So that way, larger orders get spread, and it provides a higher level of business efficiency. Most of our clients are on the broker side, so they're working with the end consumer, and we work on the consolidating volume.
Nice. That's really cool, man. And it's nice to see people coming from traditional assets into Bitcoin, even though some people, not saying any names, Goldman Sachs says it's not an asset. So
little word of advice there. Whenever Goldman Sachs says go left, go right. Their public facing research and messaging is always contrary to what they're actually doing on the back end. Or at least in my opinion. I've seen it on the equity side and the fixed income side over the last 10, 15 years. And I'm sure they'll implement that same strategy with Bitcoin as well.
Absolutely, man. And do you think Bitcoin is a must-have to have in your portfolio?
Yes, I do. 1 to 2% of a portfolio, I think, is a sensible amount to hold. And I feel safe saying that as a blanket recommendation, just because you can see 1 to 2% fall on the S&P any given day. So if you're comfortable with that level of risk, if Bitcoin went to zero, for instance, losing 1 to 2% of somebody's portfolio isn't going to put them in the poorhouse and make them eating cat food during retirement. But you have that asymmetric upside where that 1 to 2% could end up being 10, 20, or 40 or 50% of your overall portfolio in 10 years' time.
Yeah, absolutely, man. And it's crazy how early we actually are. The community is still small. There's not that many products out there that are catering to retirement funds and things like that.
Yeah.
So, super interesting. Where do you see the future of Bitcoin? Do you see it as a normal payment option, or do you see it as just like an asset to hold?
Yeah, I see it as a combination. So I see Bitcoin as the way banks and governments will eventually be moving funds from one party to the other. And owning Bitcoin is like owning a portion of that network and that currency that will be used in those large volume transactions. I think day to day, people will use, if it's right to call it synthetic Bitcoin or off-chain Bitcoin or a dollar equivalent. But I do think that large transactions will be moved from, between nations and between banks and large counterparties via Bitcoin due to its security, its length of history, and its easy use. I mean, even expensive transactions on Bitcoin are insanely cheap when compared to the traditional financial systems that we have today.
Yeah, absolutely, man. And there's no middleman for the most part. It just goes from
Yeah.
P to P, which is
you can
perfect.
go person to person, business to business, entity to entity. Sorry, pups.
All good, man.
Just woke up. I thought I had his nap timed correctly. But yeah, you can go person to person without that middleman involved. I mean, one of my favorite stories when I was at Wells, the wealth management firm I was with, we had a client that wanted to buy a house in Greece in cash. His money, this person is no AML risk, nothing. It took over a week and countless forms for him to authorize us wiring the funds over to Greece to buy a house. And I mean, it's insane to jump through those levels of hoops and ladders to move your money and buy something with your money. And Bitcoin solves that. And it solves a lot of other problems like the Federal Reserve and the cotillion effect and all these other things. But that's a practical use case that people interact with on a daily basis that they can wrap their heads around.
Yeah, and you touched on something pretty interesting, the cotillion effect, and I don't think many people know what that is. Do you mind sharing with the audience what that is?
Yeah, so it's where the Federal Reserve and the process of inflation creates parties that get more benefit from the inflation the closer they are to the faucet. So as the Fed opens that faucet up, what you have is bankers and dealers right underneath of it, scooping it up and using that money before it hits everybody else. So they get the newly printed assets, they buy goods, prices rise, and then everybody downstream is put at a disadvantage. Specifically, pensioners, people that are living on fixed incomes, teachers, police, firemen, the real heart and soul of this country that allow us to operate are the most disadvantaged by it.
Yeah, and especially from the huge stimulus packages that are coming out right now, the cotillion effect is just coming to full force.
Yeah, $8 trillion. I mean, that's not a small number.
No, not at all.
No.
But just want to say thanks again for coming on. And where can people find you? Yeah,
on Twitter at Handschuh, EHANDSCHUH, and then you can check out our website, the number one KONTO.com, or email edwin@onekanto.com for any business inquiries if you want to reach out to me directly.
Sweet. Thanks again, Edwin, and everyone have a good day.
Thanks, Cody. You too.